So you've been watching all my videos about budgeting and you got your money up and now you're ready to invest. Except all you hear about investing is
get a 401k, let's do the stock market.
But there's other options out there, and today I'm about to show you exactly what your options are for investing, all the asset classes, a whole bunch of resources. You're in for a good one. Keep it locked, this Crystal with the Cash Compass. So for those who think that investing is risky, guess what? A 9 to 5 is just as risky also. Your job can fire you tomorrow, and then what? There are no guarantees with a 9 to 5, so let's open our horizon and let's have multiple streams of income, which is like a buzz phrase right now, but it's really important. You should listen to it. Before we get into the actual asset classes, understand that there's two different types of investment strategies. The two different strategies are capital gains and cash flows. With capital gains, you only realize a profit once you actually sell it. So in order to actually make any money, you have to have it, maybe hold it for a little bit, and then you'll essentially flip it. So this would typically include your growth stocks and people who flip houses, things of that nature. In this situation, the economy has to be appreciating. If you're in a depreciating economy, you out of luck. This is what happened to people in 2008 where they were flipping houses. They bought a property, fixed it up, except houses were going down. So in that situation, you're very screwed. Alternatively, you can have cash flows, and this is a concept of buying and holding whatever it is that you're investing in. For example, a dividend stock where you'll buy the stock, maybe it doesn't grow year over year dramatically, but you do get a consistent payout, most likely quarterly, but there are monthly payouts as well, and you just hold that stock and collect those payments. The dividend that you receive is cash flow. You can enjoy that money right now. You don't have to wait until you retire, and you don't have to sell. It's yours. All right, so what are the four asset classes? They are business, real estate, paper assets, and commodities. We mostly all hear about the paper assets, so I'll just get into that so we can move on. These are your stocks, your bonds, mutual funds, ETFs, all of those things that you'll pretty much hear from a financial planner or you'll have within your 401k. With these assets, they are not in your control. You can buy a certain airline stock. Tomorrow they could drag somebody off the airplane. Come on. And then your stock drops 30%. And you had nothing to do with that. So if you're looking for an investment that has absolutely no control, then this is one of your options. Not something I typically suggest because it's very heavily based on consumer confidence and particular situations, right? And people will argue, oh, well, you can get mutual funds, you can get index funds, and those are a mix of everything. And that is true, but again, it's based on consumer confidence. If people lose confidence, the stock market as a whole will go down. Financial advisors will sell this to you the most because they do not have a fiduciary duty to you in most cases, which means they don't have to work in your best interest. They could just work to make them money. If they sold you something that is absolutely terrible for you, oh well, you should have read your contract. So when you are investing in paper assets, it's very important to make sure that you are doing your due diligence, you're reading your prospectus, you're seeing what kind of fees you are getting with these, because there are a bunch of fees and there are hidden fees within the hidden fees. So please make sure you're very well educated, not only on your particular investment, but in the economy in general, because you want to make sure that you're not investing in something that is looking a little bit weak in the market. And with stocks, you can enjoy capital gains, which would be the growth stocks when you're pretty much buying it and hoping that the price goes up so that you can sell it. And then you can also get cash flows, like I mentioned earlier, with dividends if you're buying stocks that may not appreciate as much, but they do pay a consistent dividend quarterly, monthly, whatever. Next asset class is business. And this is either your own business or maybe you investing in somebody else's business that you know. With your own business, please make sure no matter what you're getting into, you do your research. I see too often people just jumping headfirst into a business without understanding their market, without understanding the need of the customer and satisfying that need. When you're looking for a business, it's about problem solving and answering questions that people have if you're providing services, for example. So you can't just throw all your money into something because you want to make sure you're making a profit. But with this, your earning potential is pretty much limitless. It's all dependent on how much work you're putting in and how well you know your business and how good you are at your craft. Conversely, with a 9 to 5, they're going to pay you whatever they can. It's not necessarily what you're worth, but it's what would make them the best profit. Remember, companies that are hiring you for a 9 to 5, they're in the business to make money. So if they're going to pay you less than what you're worth, they will do that so they can have a positive bottom line. With your own business, you will get paid what you're worth, what work you put in there, and how well you satisfy your customers. It may take a lot of work in the beginning, but once you structure your business in a way that you know you're making profits and you can scale, the earning potential, again, is all up to you. You can end up hiring people, and you can remove yourself from that business and just reap all the benefits and still maintain some flexibility in your life to where you can do whatever you want to do. If you know that's not for you, another thing you can do is invest in somebody else's business. Let's say you have somebody who has a successful bakery, or they have a nail salon and you want to invest in them. You can say, hey, listen, I know you need some new chairs for your nail salon. I know you need whatever it is that you need. I will give that to you in exchange for 5% of your income. The money you would make would depend on a case-by-case basis. That's something where you'd have to actually talk to the owner, talk to whoever it is you need to talk to, and figure out something that would work for both parties. In this route, you wouldn't have much control, or maybe you would. Again, it depends on the situation, but you would still reap the benefits of getting a consistent cash payout. All right, so the next asset class is real estate. There are so many different options when it does come to real estate, depending on how much money you have and how involved you want to be. If you are somebody who doesn't really have that much money right now, but you just want to get into real estate, you can consider investing in what we call a REIT, which stands for a Real Estate Investment Trust. For this investment, basically you'll invest into a stock. So it's kind of a mix of real estate and the stock market, because you'll buy however many shares you want to buy, and the REIT controls all the real estate for you. Within REITs, you'll have many different real estate projects. They could be buy and hold properties where they're holding maybe multifamily housing or even commercial buildings, and they're collecting the rent. It's different depending on what REIT you invest in, but the idea is they'll have the properties, they'll manage all the real estate investments for you, and then they'll pay out a dividend. I've seen REITs as low as $22, $23 per share, so you'll just do your research and find the one that's best for you. I am not advising anybody to buy anything in particular. I am simply informing the public. So it's very low barrier to entry. You can buy however many shares you want to, and depending on what company you go with, you can get a consistent dividend of maybe 8% return or more. Who knows? Do your research. With REIT stocks, typically you will not see major fluctuations in their pricing. It stays pretty consistent because you get a consistent dividend. One thing about dividends are that they are taxed at ordinary interest rates. There are ways to get around this, but typically if you're getting a dividend, you will have to pay it at the tax rate that you're getting currently, which is not the most advantageous thing because we want to pay as least taxes as possible, right? Similar to investing in REIT stocks, there are crowdfunding. Not my personal favorite, but it's the idea of everybody putting their money into a business or a company, and they will also invest that money for you. You don't have any control over what assets they choose when you are doing crowdfunding, and there's very low liquidity. A lot of times you'll have to put your money in there and you can't take it out for a set amount of time. There are high fees, there's certain tax treatment with the money that you do get, so you have to be very aware of the tax disadvantages when you're thinking about REITs and crowdfunding. Alternatively, you can own the asset yourself. And in some cases, you can put down as low as 3.5% or maybe even 0 if you've worked in the military. I think if you're a teacher, you get pretty low percentages down too. So do your research. I know I've been saying that a lot. Take a shot every time I say that. Don't do that, you'll be drunk. But owning the asset is the best option because you have full control. Again, your earning potential is up to you. However many houses you want to purchase, how involved do you want to be? Do you want to do a short-term rental, which is like an Airbnb, or a long-term rental, which is having a consistent renter there for the year or month to month? If you want to get in, but you're maybe a little bit afraid of the risk, you can do what they call house hacking, which is buying a multifamily property. If you want to get the typical home 30-year fixed rate mortgage, you can get up to 4 units, live in one of the units, and rent the other ones out. If you buy properly, your tenants could be paying your mortgage for you. And in some cases, you might even be making money, which means no rent, no payments, you just make a bank. So you can have everything paid for you, and there are so many tax advantages to owning real estate. You can depreciate the property. So in some cases, even though you made maybe $10,000, on paper, it could look like you made nothing. This is what the rich do. I think it's something like 90% of millionaires own real estate, and that tells you something, right? Last asset class are commodities. That'll be your gold, your silver, which some argue are not commodities, but let's keep it clean. Oil, crops, things of that nature. People like purchasing gold and silver because they consider that actual money. It's a store of wealth. It'll keep up with inflation and it holds its value, like I said. And one thing to watch out for when you're thinking about investing in precious metals is there are stocks for these precious metals, but you do not actually own the gold. If you're thinking about purchasing gold, you should get the physical asset because that is the wealth in your hands. You have absolute control over it. In a situation where maybe money is not what it is now, because remember, nothing is forever. We might have paper currency right now, but there's no guarantee that we'll have paper currency in the future. So having gold in your portfolio is something that is a good idea. And also thinking about ways to invest in commodities, having your own crops, having oil, things like that are pretty consistent. I will be doing detailed videos of each asset class, so let me know in the comments which one you're most interested in and I will do that one first. I want to remind everybody to please invest. Savings is not enough in this climate because our dollars are worth less year over year. When you hear inflation, that is losing your purchasing power. What that means is your money is becoming worthless year after year. You can buy less things with your money, so you need to take that money and put it in something else. If you like this video, then like this video. It's a no-brainer. Don't stop watching here. Please continue to educate yourself. I have plenty of videos you can watch in the cards above, or you can click the links down below. That's all for today, and as always, keep your money up.